All right, let's go over oil first of all. All right, we're over here in oil. Go over gold in 1 second also. This black line, if you're trading JaySignal, it works on your own charts. We do have it available for lease for any market right across the board. The S&P caught a beautiful one at 41 yesterday for over 10 points. Some of you guys sent me your charts on that. Good job. The S&P was a gorgeous buy yesterday, S&P 500. So it doesn't matter which markets you trade. It's the same thing. S&P landed right on this black line. 41 buy was a fill. Had a huge 10-point move. Same thing this morning. You want to get as close to this black line when you're buying and selling as possible, because that's the time you want to look for the retracement. That's a sweet spot in the market. So you want to try to get as close, and then you can match it up with market profile. You can see I have two profiles in the room. I have price profile and I have a volume profile on the bottom left black charts. If the market's in a downtrend, if you break price profile or volume profile, which you broke both, you broke through volume profile. If you're in a downtrend, you don't buy low value. You wait until it breaks and retest. You broke low value. You retested. Consequently, the JaySignal gave you the bullseye short to get short here also. So your fill was 68.69. You got your first target off already on the first position. So you can use JaySignal with the overall market profile levels in the room. And this is called a number 3. Gerald, roll over to gold. Gold is more pronounced in the move. Are you over there, buddy? Let me see if you're over on gold. Thanks, man. Gold, you can see, was more of a pronounced move. We had a breakout right here of high value area was 1258.97. The moving averages are up, so we don't sell 1258.97. We look for 1258.97 to break out, which it did, and went to 1262. Then it retested 1259. On that retest, consequently, as a retest of JaySignal, within a couple ticks, you want to be as close to that black line as possible to buy or sell. Here it is on my long-term time frame. And that caught you right at the low of 1259, and that puppy moved all the way up to almost my target of 1275. It's a 150 tick possible move. That's $1,500 per one contract with a maximum risk of $130 no matter what. You don't risk more than 13 tick stop on any trade in the room, even JaySignal. Typically, your trade should be $90 to $110 risk, 3 ticks above or below the swing high. If you get close to that black line, guys and gals, if you start trading like this, you're going to find yourself, you have limited risk. And if you have limited risk, you're good to go. If you see the dots, IVA, the bottom line, you're going to be about 7 ticks from the swing low. That dot's going to lag a little bit because it's a divergence dot, right? So that's going to put you in around a $90 to $110 stop loss. Why do traders wait for it? They wait for it because it gives them confirmation of divergence. Okay? If you want to manually look for divergence here on gold, when you're coming near that black line, you can also manually do it yourself without the yellow dot. You'll look for a lower high or higher low right here. Look at my divergence oscillator below. You can see a higher low right near the black line within 2 or 3 ticks. You can put your position on and place your stop 2 or 3 ticks below that black line. At all times, you must have your stop below or above that black line if you're trading JaySignal. Does that make sense? So with or without that yellow dot, you need to be as close to that black line as possible when you're buying and selling. But if you do it without the yellow dot, you better make sure you understand what divergence is. And right here, you had divergence. See the higher low right here in gold? That gave you that big $1,500 possible move. Make sense? But the key to trading this, I love trading with the room, is trading it with market profile. And number 3s line up all the time like this. You'll see tons and tons and tons of trades. Number 3 is when the moving averages are in an uptrend. And I'm looking at my volume profile on the bottom left and my price profile here. Number 3 says I don't sell HVA high value in an uptrend. I wait for it to break, retest, and go long. Well, JaySignal coincides with my market profile. You got your ultimate trade. And that's what it does all the time in the room. So today, you had the long right off of just after 8 o'clock off of gold. It worked. It lined up perfect. That's a perfect alignment between JaySignal and market profile. Same with oil. It lined up perfect. You broke volume profile, you retest the volume profile. You broke price profile, you retest the price volume price profile. Consequently, within 2 or 3 ticks of the black line with the bullseye, there you go. Okay? So that's key, because if you can just trade market profile levels with using JaySignal Confluence, you got yourself the ultimate trade, because you're taking 2 separate strategies and combining them into one. You're taking my Fibonacci-based strategy off of JaySignal into my market profile strategy, and when they match up together, you got ultimate alignment. And that's why it's so accurate. That's how we can get these trades like this 150 tick trade like on gold this morning with limited risk. I mean, you're risking $90 to $110 to make possible $1,500 on one trade, and it happens every week like this. Every week, same setup.